this evening is going to lead us off.
Yeah. Okay, so we good to go, Logan? All set?
We are good to go.
All right, so I just want to thank you guys for showing up again. I know we said that already once, but we really do appreciate it. And, we hope to, we hope that today you might leave this live call a little bit smarter than you came in. So without further ado, let's show the welcome page, Logan, and let's get it going. Yeah, there it is, the welcome, right? Welcome to everybody. All right, so starting off, let's just get right, because this can be a very overwhelming topic to explain to people, and we do have a lot of information on these slideshow, but what we like to do is just kind of start out with a very simplistic term or definition of what cryptocurrency is. So in my eyes, in Logan's eyes, this is our best definition. A cryptocurrency is a digital asset class of monetary value originally employed to serve as a peer-to-peer electronic cash system. This idea was created to provide a more efficient and durable medium of exchange to people around the world, right? Even though cryptocurrency was initially meant to be the replacement to fiat currency, right? It's in the word cryptocurrency. The idea behind the use case and what these assets are really capable of is just kind of being discovered, right? The utility goes far beyond what I think people initially thought, right? So going on from that, right, we can talk more about where crypto derived from, right? And right, we talked cryptocurrency. There's two words. We talked about currency, right? Obviously, it was originally employed to serve as a digital cash solution, but there's also that other word in there, right? That's crypto, right? And if you don't know what that word is, that means secret in Greek, right? Which gives us a clue as to what cryptography, right, is all about and what the study is and what it's all about, right? Cryptocurrency is very much about utilizing cryptography and allowing transactions to be anonymous and secure, right? We can still track transactions and do all that great stuff, but it truly is a secure network where transactions we kind of remove the need for third parties, right? And we'll get more into how we do that shortly. But cryptography is certainly, the where the ideology of cryptocurrency was initially conceived, right? And I believe that was, Logan, we were discussing earlier, right? When was cryptocurrency initially conceived? Was it not in the 80s, right? The idea of
the first time it was
cash,
conceived
right?
was in the 80s. Yeah.
Right. So obviously it wasn't implemented. We saw our first implementation of cryptocurrency with Bitcoin around the 2008 to 2009 area, right? But the idea of having a cryptographic digital currency has actually been around for a little while, right? So that's definitely something important to know. So going on from that, Logan, which would be great, we get into the technology side of things, right? And don't get me wrong, there are just an immense amount of different technological aspects that allow cryptocurrency to be what it is today. But of course, the surface level stuff is everybody's what is blockchain, right? So simply put, a blockchain is the decentralized ledger behind cryptocurrency that tracks and stores the transaction information within something called blocks, right? Along with other consensus mechanisms, which we'll get into, these blocks then link with one another to verify transactions and secure the network, right? So Bitcoin runs on a blockchain. And it's kind of similar to what you see, right? It takes one block at a time, and through consensus mechanisms, right, people take advantage of those. So, with blockchain, you get some security, right? So it's permissionless transactions that are immune to central authority, counterfeit, and hacking for the most part, right? It's not a black and white thing. We've obviously seen problems, but infringing upon a blockchain is not as easy as you may think it is. There's also, right, I don't want to leave blockchain alone, right? Without stuff like smart contracts and different consensus mechanisms, crypto would not be at all what it is today. But I just want to give a quick definition of maybe what a smart contract is, and just to put that in there, I don't want to put too many slides, but smart contracts are huge with DeFi, huge with Ethereum, and if you don't know what it is, a smart contract is a transaction protocol that is able to fulfill self-permissioned financial agreements without the presence of any intermediaries. So when you combine smart contracts with blockchain, you get a pretty impressive thing, right? And that's what we'll be going into. And you obviously utilize stuff like proof of work, right, which is where the consensus mechanism operates by requiring users to solve or compute a considerably hard mathematical function, right, as people call them, miners, right? They mine Bitcoin by securing the consensus by giving right? That's why there's these mining facilities. Then you have proof of stake, which we see Ethereum moving into. That's also another very popular consensus mechanism and definitely caters in that technology section of crypto, because without these consensus mechanisms, we wouldn't have consensus, and therefore these protocols would not be able to function on a day-to-day basis, right? So technology is really the baseline to all this stuff. So it's very important that we understand kind of what goes on, right? What is a blockchain? What is consensus, right? How do you secure a network? And that's what it is, right? There's definitely more consensus mechanisms, right? Like proof of capacity, proof of burn, right? All the stuff. But the main ones that you're going to see, especially if you're new to cryptocurrency, will be the proof of work, right? Which is Bitcoin. That's what, you know, the miners use, and proof of stake, which we see, you know, in stuff like Cardano is a very popular proof of stake protocol. So yeah. Go ahead, Logan. We can move on to the next one. So after talking about all this stuff, we explain what cryptocurrency is, and you know the technology behind it. How do you go buy some, right? Well, with that, you're presented with two options, and that's either via a centralized exchange or a CEX, haha, very funny, or a decentralized exchange, which is called a DEX, right? And Logan, we can go next into our slide, which it kind of briefly explains what these are, right? So a centralized exchange is kind of the main exchanges that the retail investor will find themselves using. I'm sure many of you guys that have bought cryptocurrency in here have used one or more of these exchanges, right? I know I have. And those being Coinbase, Binance, Crypto.com. We can also consider Kraken, KuCoin, Huobi, OKEX, FTX, right? There's all these big ones that you hear about are very much centralized exchanges run by, you know, companies, right? We see Coinbase actually listed on the equities market. They recently had their IPO, I believe, April 20th. On April 20th, yep, that was actually the recent top of Bitcoin. So, you know, they are very much centralized. It is a company that's running them. But there, you know, there's pros and cons to that, right? And the big complaint, centralized exchanges, and Logan, tell me if you agree, right? Is kind of the lack of variety. I think they're coming along and they're fixing it. But, you know, a big problem on centralized exchanges is, you know, they're very friendly to retail investors, and retail investors want to get their hands on a lot of these altcoins, and a lot of these exchanges don't, you know, have the trading pair. Logan, do you have any thoughts on that?
Absolutely. I mean, I made sure to include that in the text on this slide. There's a
Right.
lot of these bigger names that don't have a lot of the projects that we get questions about every day.
Some of our favorite projects, mind you. So,
Yeah.
you know, this is where we come into the power of what is the DEX, right? So, Logan, go ahead there. A decentralized exchange, the best way I could explain it, is a peer-to-peer marketplace where the transactions occur directly between traders, right? So think about the centralized exchange. It's like a typical, almost like a brokerage, right? You're doing stuff, but you have that intermediary, right? You have that company that's kind of mediating, that's kind of facilitating the entire transaction. But on a decentralized exchange, it doesn't quite work that way, right? It's actually between the traders, and that's what makes it decentralized, right? There's no intermediaries. So, in what goes into that, a ton of great stuff. Wait, go back real quick, Logan. Can you? I'm sorry. Some examples of a decentralized exchange, right, would be Uniswap, which I use all the time. PancakeSwap, SushiSwap, they're all great. And these projects allow you to, really explore DeFi, right? And if you haven't used these, I definitely encourage you to go and experiment. Go on the website. It's a good thing to use. I'm a big supporter of DEXs, and I definitely wouldn't be where I am today without utilizing a DEX. You know what I mean? I've made some very good investments utilizing DEXs such as Uniswap. And Logan, now we can go to the next slide. So what makes a decentralized exchange even possible, right? How are people making all these coins, and then these exchanges are able to find the currency pair and trade it, and they, you would think that if I were to go make a coin at my house, it would be fairly hard for the exchanges to take my data and implement it into their website, especially when you have thousands of them being made every day, right? That's where we have stuff called the protocol token transfer networks, as I would explain. So the big one that we all know is the Ethereum one, or the ERC20, right? So in simple terms, the ERC20 is the main token that runs on the Ethereum blockchain. This is a quote actually from the Ethereum website explaining really in depth what an ERC20 does. An ERC20 actually introduces a standard for fungible tokens. I know you guys are familiar with non-fungible tokens, NFTs, but the fungible tokens, in other words, that they have a property that makes each token exactly the same. So though that these tokens are different, you see on this page, right, we have Ethereum, USDC, Uniswap, Chainlink, Theta, Compound, Synthetics, Decentraland. Though they are all different projects, when you go to the exchange, it all recognizes them as the same because they're all built on the Ethereum blockchain, or the Ethereum token transfer network, the Ethereum network, right? So it's actually pretty impressive how that stuff works. And then if you go to the next one, right, there's more than just Ethereum, right? We see the rise of the Binance smart chain, right? And these are referred to as a BEP2 or a BEP20. And it's pretty much the same idea.
Yeah.
We'll take questions at the end. But yeah, these are referred to as a BEP20, and pretty much the same idea, right? A BEP20 was the first iteration of the Binance chain tokenization, and it was very useful in the space. And we see, like, that's how we kind of see the rise of shitcoins, if you will, right? Logan, I'm sure Logan has a lot to say about the BEP20 and all the stuff with the Binance stuff, but. Yeah, pretty cool to acknowledge that kind of stuff. Binance has taken its risen against Ethereum. It's not quite on that level, but it's definitely noticeable. And then just off the side, before we move on to the next topic, there are other token transfer networks, right? One of them being the Omni network. The Omni network is actually the protocol layer that was built on top of the Bitcoin blockchain network, right? So Omni is utilized for Bitcoin. And then you have other stuff like the TRC20, which is the Tron network, right? So there are other token transfer networks, but not every, coin has their own, right? It's a fairly rare, token transfer networks are not all around because the exchanges need to recognize these things, right? So when you do invent a new, ERC20, BEP20, TRC20, right, all exchanges kind of need to conform to that in order to accept that type of token. So it gets rather complex, but I hope that kind of made sense to you. But yeah, we can move on to the next one, Logan. And then this is a great one, Logan. We had a conversation about this earlier.
We did. We made sure we had to include this.
Yeah, I mean, it's kind of like off topic, I guess, a little bit, but this is actually a graphic that I took off of Binance. They put it on their Twitter, and I always knew this, right, but it kind of passes my mind how, like, something so obvious just flies over people's heads, right, and it doesn't even get noticed. There's actually a difference between coins and tokens, right, and you guys can read here for yourselves what the difference is, but I just think everyone should be aware of that. So be cautious, right? Especially when you're talking around someone like me or Logan, right? If you call something a token that's not a token, you might get corrected, right? It's like calling a coin a share, right? I'll get you for that one. But yeah, no, great visual. I don't need to read anything. You guys can see what it says there. And yeah, so what did we do? We went on the exchange. We're going through our journey. We understand crypto, buying coins. Now that I bought my coin on the exchange, what's the next step? Well, the next step is to understand that if they're not your keys, it's not your damn crypto, right? Please, I encourage you guys to take your cryptocurrency off of exchange to really gain the full ownership and possession of the coin, right? If the exchange goes bankrupt, gets hacked, etc., something bad happens to it, there is actually a strong possibility that you could lose your entire investment, right? And we've seen this happen in the past to many people, to many exchanges, right? And I could go into examples, but yeah, when you keep your crypto on these exchanges, you open yourself up to risk. You do not truly own those coins, and that's why it's important to consider a wallet. And that leads us into our next slide, I believe. Yes, perfect. Okay, so there's many wallets to choose from, and this is kind of gets overwhelming, and I know a lot of people are like scared to take their coins off of exchanges because they're like, oh, what if I type in the wrong wallet address and whatnot, but those are just some things that you have to understand and kind of get used to. But we definitely recommend that you take your coins off of exchange and put them into either a hot wallet or a cold wallet, right? So a hot wallet, if you guys don't know, is like a software wallet like MetaMask, Trust Wallet, or any of the local native coin wallets like Cardano has Daedalus, Yoroi, and I believe Nami, right? Those are native Cardano wallets, and those are hot wallets, by the way. And then, of course, we have to throw in Nano. Shout out to Nano. Nano has Natrium and a bunch of other ones, right? There's many of other ones, but I utilize Natrium. Those are all hot wallets, right? Because they're connected to the internet, right? They have an internet connection. The other wallet is a cold wallet, right? It's something like the Nano ledger, right? Or something that you have on a small USB drive. I know you hear some horror stories about people, losing the key phrase and the seed phrase and losing, hundreds of millions of dollars. But, cold wallets are definitely more secure and much better for long-term storage of cryptocurrency. If you're looking to hold your Bitcoin, your Ethereum, or whatever have you for an extended period of time, I definitely suggest that you take your crypto off an exchange and consider a cold wallet. It may be worth your time. They are a little pricey. Logan, do you know how much a cold wallet costs, like a Nano ledger?
I could be wrong. Last time I checked, it was like $150.
Okay, so I mean, it's like a little much to maybe off the sound, when you're like, oh, why can't I just use a hot wallet for free? But, you are really paying for that sense of security, right? So, to some people, it's worth it. To some people, it's not. I think it's worth it, especially if you're going to put yourself in the position of a long-term investor. Logan, any thoughts?
Yeah, definitely. Especially for, as we said here, very large portfolios. Anything over 100K, I really think you should be having on a Nano ledger or a hardware wallet.
Yeah, and there's a bunch of different cold wallets. We don't have a list right now of all the cold wallets we as OBR recommend, but we definitely will do that.
Yeah, we can just from here obviously recommend MetaMask and Trust Wallet.
Yeah.
Great.
Yep.
Two great wallets.
Yes, yep.
So, Austin, thank you for that. That was beautiful. And thank you for taming yourself.
Yeah, glad you guys enjoyed. And I want you, let's keep the conversation going. How about
Absolutely. And thank you for taming yourself, because I know you could have went on each and every one of those subjects for a very long period of time.
Oh, it would have been bad, brother. It would have been bad.
So, to get started in this section, I want you guys to think of the stock market as broken into different sectors, right? There's tech, financial, etc. The crypto market is also broken into sectors, and that's what we're going to get into right now. So the first one we're going to look into is decentralized finance, commonly referred to as DeFi. In its simplest form, decentralized finance, or DeFi, is a financial space open to everyone that does not require the assistance of intermediaries like banks, exchanges, or brokerages.
لا ما فيك تدور الشفاز.
Oh, my apologies, John. Gotta mute your mic. Continue, Logan.
Thank you, sir. Many of the big DeFi chains today operate by building vast ecosystems of decentralized applications, or dApps. We've actually spoken a lot about dApps as well in OBR. By utilizing the capabilities of the blockchain and smart contract technology. Within DeFi, you can now act as a bank, doing the things that they offer. You can earn interest, borrow, lend, buy insurance, as well as trade derivatives and other assets. So here below are some examples of DeFi chains and their native applications. Ethereum has Aave, which is a DeFi lending protocol. There's obviously Synthetics, which I've spoken about a lot, which is synthetics derivatives trading on the blockchain, which is also very, very interesting. And also XRP, one that a lot of people know, that is also a coin that is in DeFi.
Logan, I want to back right on this, and I want to say that decentralized finance, in my opinion, right, I said it in the middle of the sentence by accident, but it very much seems to be the backbone of cryptocurrency right now.
Right now, absolutely.
Or would you agree with that? Yeah. Okay.
No, I definitely do agree with that, especially right now, while the other projects and other sectors that we're about to get into are taking a little bit longer to get adopted. DeFi is definitely in the highlight right now.
I would definitely compare DeFi to like the stock market's tech sector, almost, right?
Yeah, that's a really good way to put it.
Yeah.
Awesome. So we're going to move into digital cash solutions, DCS. So it may be true that decentralized finance gets a lot of the notoriety that we just spoke about, but it should not prevent us from acknowledging the special technology that is digital cash solutions. So digital cash was actually the idea responsible for giving birth to cryptocurrency, right? Bitcoin. Yes, though Bitcoin is largely looked at as a store of value, it was originally launched to function as a peer-to-peer electronic cash system. Yet, most, if not all, of the digital cash solutions today are more efficient than Bitcoin. We talk about some very specific ones in here, like Nano, listed below, Litecoin as well. These modern-day technological assets are capable of achieving lightning-fast transaction speeds, and that is not an understatement, minuscule fees, and high scalability, all while remaining largely decentralized. These attributes may allow for digital cash solutions to play a much bigger role in our financial future than we may think. Right? So when we were writing largely decentralized, that was a slight jab towards XRP.
Slight jab. And I noticed there how it says minuscule fees. There are actually, if I'm not mistaken,
Zero fees.
some
Zero
digital
fees.
cash solutions that are feeless. But moving
Absolutely.
on, Logan, go ahead.
So moving into another one, which we also speak about a lot here, decentralized digital content, DDC. So it's not a secret anymore that rollout through digital content and non-fungible tokens hit the world of cryptocurrency by storm in 2021. Obviously, it's all over the rave now. Though many may not understand the true significance of this sector, the idea behind decentralized digital content and what it's trying to achieve is quite remarkable, and is also one of the more infantile parts of the market. In essence, decentralized digital content is aiming to replace modern-day content services like YouTube, Spotify, and Twitch. We can name a couple very specifically just off of those examples. However, the larger goal being to enable open canvas creation and expression with no central authority. NFTs perhaps did play the most significant role in growing this sector, DDC, this year. An NFT is non-fungible, meaning its value cannot be easily substituted or exchanged on a one-to-one basis. Just like art or music, an NFT has subjective value, just like a lot of other cryptos as well. This creates a whole other world of possibilities when it comes to the consumption of art, music, video, and general entertainment. So some examples of DDC assets, obviously NGUYEN, Decentraland, both of those being in the gaming space mainly. Audius, one of Austin's favorite tokens, coins. Is obviously they're focusing on music content and going to compete with Spotify. And then we also have Chili's, which is in the sports sector as well. Sorry,
I'm just so eager to just say
I know,
this,
you
right?
really were.
I'm sorry. But we talk about, right, in there it says NFTs perhaps played one of the larger parts in growing, right? But now we're seeing something even emerge, right, Logan? Would you say the metaverse is even like just overtaking the power or the hype of NFTs, or what do you think about that?
I think that they rise kind of the same. I think they're positively correlated together.
Right. Gotcha.
But I think that is definitely going to be the leading, couple of, if we want to look at it in companies in the stock market, that's going to be the leading area of this sector for at least the foreseeable future.
Yeah, of course. Like the idea of DDC, decentralized digital content, is going to be maybe the biggest one, biggest sector that we're talking about, right? DeFi is the king right now, but do not sleep on decentralized digital content.
Especially in the next couple of years. So, privacy. This is actually one that not a lot of people talk about, but it is very, very prevalent, and some very big names as well. So, perhaps one of the bigger narratives in 2017, privacy coins are crypto assets that allow for increased security measures when buying, selling, withdrawing, and depositing digital coins. The main utility behind privacy protocols is, as you could imagine, to enable security and anonymity when enacting with the blockchain. Believe it or not, most transactions that run on blockchain tech today are easily viewed by the public eye. You can see this just by easily going to etherscan.io. You can see pretty much every single transaction, thus making for some very serious concerns when it comes to financial safety and security. In order to allow users to interact with the blockchain anonymously, privacy coins utilize shielded addresses, ring signatures, and other advanced mathematical cryptography, which we are now familiar with thanks to the beginning of this call. So some very big examples are Monero, Dash, and Zcash. I'm sure everyone's actually heard those names. Anything on privacy tokens, Austin?
Yeah, you put it perfectly in the beginning, right? They haven't really been a narrative. It was a big thing in 2017. They haven't really got much love. I know there are still like a ton of bulls for Monero and Zcash and Dash, and I know Pirate Chain's a big one. There are the privacy coin bulls there, and trust me, Logan, what do I say to you all the time? Invest out of the narrative. So, maybe if you were a smart cookie, you could go for this live call and maybe research some privacy coins that are on some pretty big discounts. And maybe you would find some gems hidden around there. Who knows?
Absolutely. So, moving into exchange-based tokens, and I'm sure you guys have started to see a lot of these, right? CRO is a very big one, Crypto.com coin, and honestly, a lot of exchanges are now coming up with their own coins. Even Voyager token is one of the climbing ones in the rankings. But an exchange-based token is a digital asset that is native to a given crypto exchange. Very, very simple. Whether or not the exchange is decentralized or centralized, many exchanges participating in the crypto space are starting to offer a native asset. In a general sense, exchange-based tokens are designed to increase an exchange's liquidity, incentivize trading activity, or facilitate an exchange's community governance process. Currently, there are over 200 exchange coins in the crypto asset class, and below are some of the examples that we just went over, right? We have Binance Coin, Uniswap, FTX token, Huobi token, Qcoin token. There's a lot. Even Curved DAO token.
Yeah, and we saw the real rise of exchange-based tokens took place really when Binance Coin did its thing.
Absolutely.
Right? We see Binance Coin as really a true blue chip in the cryptocurrency market, and
It's a great point.
Before that there wasn't really much of a name in that market sector of exchange-based tokens.
Definitely not. But something to definitely keep your eye on is who just bought the Staples Center. It's the Crypto.com Center.
Crypto.com, man.
Right. So I think Crypto.com coin, me and Austin were talking about this. I think that it'll do well in the future.
Yeah, and then you see FTX on all the MLB umpires' jerseys, and you see all these. I know the UFC, right, on their octagon, they have Crypto.coms plastered everywhere. So yeah, exchange-based tokens are doing their thing, and they are not going anywhere anytime soon. I believe the Crypto.com deal with the
30 years, right?
Staples. 20 years, right?
20 years.
So that means Crypto.com automatically, we can assume, will be relevant past the year 2040, which in itself is quite remarkable, if you ask me.
So, moving into our last sector, stablecoins. As you can imagine, the idea behind stablecoins is rather self-explanatory. They are digital assets that are utilized for their stability and not their volatility. Most of the time, the value of stablecoins are pegged to that of fiat currency, such as the US dollar. And, seeing how the yuan is going to come out, it may actually be pegged to the Chinese yuan or any other asset of relative stability. Stablecoins are also widely known for being a part of crypto exit strategies. Typically, when a crypto investor is cashing out, they will often utilize stablecoins as a way to quickly take profits and escape downward volatility. Actually, it's very, very logical and something I've done in my trading many, many times. Believe it or not, stablecoins are also a very key component of decentralized finance, and without their presence, DeFi would be less efficient and filled with much more risk to investors. Stablecoins are pegged currencies, while the rest of the cryptocurrency space is floating currencies. So, some examples of stablecoins, obviously Tether. We can talk about how sketchy they are in another time, but besides that, USDC, Binance USD, and many, many more. And just, this isn't on the slide. Can we get that guy muted? Awesome.
Yeah, we're good. Yep.
Thanks. This isn't on the slide, but something to keep aware of is also going to be the new sector coming up, which is, central bank digital currencies and how they're going to utilize stable coins and how they're really going to tie in.
Logan, is this the last market sector slide? I believe it is.
Yes.
This is perfect. I just wanted to say one last thing about that. So in this way, we went over 6 of the more significant market sectors that me and Logan thought that you guys should know about, right? These niches in cryptocurrency. But, let me assure you that this was only scratching the surface of what cryptocurrency is. There's going to be many more market sectors to be born in the cryptocurrency asset class, right? There's already different sectors that we didn't mention, like insurance, data storage, oracles, meme coins, right? Community coins, wrapped tokens, Internet of Things, IoT, yield farming, derivatives, and lending and borrowing, right? We named some of the bigger ones right now, but like I said, let me assure you, this market is growing, and we will get into that, and, there are more market sectors than what we just named. So
absolutely. 100%. So this actually brings us very nicely into beware of shitcoins. And in the top right, we have everyone's favorite shitcoin. So there are over 13,000 public projects in cryptocurrency at this time, but a portion of them are obviously just from people who thought it would be funny to start their own crypto. And the moral of the story with that is, as with any market, and this is something we do preach to you guys, there's a lot of bad projects with bad people involved, and there are also great projects with great teams. Please be aware of your investment. If you do invest into these shitcoins and you know it's a shitcoin, invest with money you imagine you are lighting in fire in front of your eyes. I say this all the time. If you make profit, then congratulations. But your first expectation if you invest in these is that you're going to lose your money, right? And just something that I wanted to make a note with this, just because it has a low market cap does not mean it's a shitcoin. A shitcoin, at its bare bones, is a project that has no utility whatsoever and a team that is not really trying to go anywhere with the project. A market cap has really nothing to do with it.
Which is a misconception, I think, to a
Yeah,
lot of people.
absolutely.
So I'm glad you pointed that out, right? So, yeah.
So, bringing us into market cap. Yeah. Market cap is just something we wanted to include at the end here for you guys because we use it, and obviously the ranking sites use it, just to gauge how large a cryptocurrency is relative to other ones and also its total size. So, market capitalization, is the total value of all the coins that have been mined. It's calculated by multiplying the number of coins in circulation by the current market price of a single coin. Market cap is a fantastic metric for comparing the total value of cryptocurrencies, their liquidity, and their track record.
And let me say there is a error in this slide, and that is my fault, right? When it says market capitalization and the total value of all the coins that have been mined, right? Not every currency needs crypto is mined, right? As we spoke about before, one of my favorite cryptocurrencies, right? Nano actually has a static supply where all the supply is already in circulation, right? So that's just an error on my part.
Mined or are already in circulation, right?
Yes.
Yeah. So the underlying purpose, and I really wanted to bring this in here to really wrap home this idea to you guys. A larger argument for cryptocurrencies, and one of my favorite, is economic equality. Think of Venezuela or Turkey with locations around the world such as these with hyperinflation. You can see how really terrible it is to live in these countries now, just because of the hyperinflation that they're experiencing. Cryptocurrencies can provide an alternative to dysfunctional fiat currencies for savings, payments, and investments. Obviously, all you need is a phone to really connect into this marketplace. Crypto increases economic mobility around the world and truly gives us the opportunity to level the playing field on a global scale while empowering the people through the removal of third parties. I love this slide. I got the chills.
It's really it puts everything in perspective, right? What's the true purpose of crypto, right? Why was it created? Well, it was not only created to be efficient and a store of value, I guess you could say, but this comes down to like the purpose of it is being discovered as we go, right? And if people are realizing we can use these decentralized currencies to create what Logan said, that economic mobility around the world that levels the playing fields, right? You're going to see some of these countries, these third world countries, quickly rise in economic mobility and probably compete with many of the first world countries, right? Not that far out into the future, right? This is going to probably happen rather quickly, So it's a lot, and it's kind of emotional. It makes me happy, I don't know. Yeah,
absolutely. Imagine you lived in a country where you could not access a bank account. And at my last job, I spoke to a lot of people where they couldn't access a bank account. And now they can, because all they need is their phone. It's really quite remarkable.
Yeah, it's unbelievable. That's unbelievable.
So now we're going to move into the adoption of cryptocurrency. At this point, we are all familiar with the cryptocurrency hype. We all know about Bitcoin. We all know about Shiba and Doge. But how fast is the cryptocurrency market actually getting adopted? And despite the news you may hear about Bitcoin reaching its top and it's going to go to zero, or inclinations that we may be late into the adoption of crypto, that cannot be farther from the truth. Truly. In the macro view, we are in the embryonic stages of this new and very, very exciting market. And that brings in this picture. So this is the adoption of the internet versus the adoption of crypto. Obviously, we have the user timeline on the bottom for crypto and internet user timeline on the top, and then total users on the right in the millions. Just crazy to see. It's growing faster than the internet.
So it puts things into perspective for people, right? And this is obviously measured by a rate of adoption, how many total users, and obviously we see the right side is measured in millions, right? We are in the year 1998, right now for cryptocurrency, and we can compare the internet and crypto together because the rate of adoption thus far has been just exactly the same, right? There's been so many correlations, and it's just mind-boggling when you put these charts on top of each other, right? We were born too late to explore the world, too early to explore the universe, but we were born just in damn time to invest in cryptocurrency. So, take advantage of it.
That was good. Did you think of that?
That's been a thing of mine for a while, Logan. So that's always stored in the head. But no, it's true, right? It's true. It's not very often, right? And we're kind of going off the path here, but it's not very often that a whole new asset class arises, right? I believe like the last time that happened was, like the rise of the equities market, right? Something like a whole new marketplace for people to invest in with this whole new thing that didn't exist before, right? So this does not happen very often, right? If you go look at the history of human beings, this event does not occur very often, and it probably will not occur again for an extremely long time, right? Yes, cryptocurrency will evolve, but is there going to be a whole new asset class that is not digital, it's not physical, it's something else, right? I don't know even if you could conceive that, right? So you were born, you are alive in a very special time, and you are put in a perfect position to, generate some wealth if you take the time to understand this market. So, yeah, I hope this visual puts stuff into perspective for you. I know it did for me when I see it, when I look at it. This is why me and Logan and I have so much conviction in cryptocurrency. Yes, it is speculative. Yes, it's volatile. But in the grand scheme of things, we are just so early, and the opportunity is really out of this world. So
Not conceivable.
Yeah. Is that it? I don't. Maybe, perhaps.
Nope. Now we get to show time.
Yeah.
So at this part, we're going to move over to Discord. We're going to move off of the slideshow, and we're just going to have an open discussion about some of our favorite projects and why they are.
Logan, yeah. So I mean, do you want?
Cool. So yeah, we can both start. Just go do one each, I guess.
Yeah. We'll touch on projects that we like right now, and to the people that are in the Discord, we know I'm gonna get creative for this one. So go ahead.
Oh, that's awesome. That's all. I'm excited to see yours then. So do you want me to start, or do you want to start?
You started.
This is good actually. I think I'm gonna start with synthetics. So synthetics is the backbone for derivatives trading in DeFi, and that's why I really like it. It's tapping into a new market which allows anyone, really anywhere, to, as we were just talking about, gain on-chain exposure to over, as of right now, 20 assets. In the future, it's going to be a lot more. But synthetics really is a decentralized synthetic asset issuance protocol. Can't believe I remember that word, that sentence all the time, on Ethereum. And essentially, they have a decentralized exchange called Quenta, in which you can go and you can trade derivatives markets on the blockchain, which is really interesting. And for anybody that does not know why that is so interesting, is because the derivatives market is literally quite gigantic. It's often estimated at more than $1.2 quadrillion. It is by far the largest financial market in the world. And it is the cause for the 2008 financial crisis as well. So that's why I really like synthetics. It taps into this market. Nobody's really been able to do it yet. And I think that it's an industry leader in that regard. So that's synthetics.
I agree, man. The mighty beast synthetics, right? The expectations are high for synthetics. It's been a little bit underperformed. It underperformed a little bit, right? I think you would agree with that. It's still potential through the roof. I think Binance gave it some problems when it started offering derivative trading on their European exchange, right? Not Binance US, just Binance. I think that definitely took some power away from synthetics, but I agree, Logan. I'm very bullish on synthetics. I think the fundamentals are amazing, and an investment in a project like that certainly would not be a bad idea.
Yeah, and it actually, just one last thing for synthetics,
yeah.
It offers something very interesting, which I learned. It offers 2 synthetic cryptocurrency indexes, which I've not actually seen before. I don't know if you have. But the first one is SDeFi, which tracks a basket of DeFi assets, and CSEX, which tracks a basket of centralized exchange tokens. It's very cool.
Yeah, that is cool. Sweet. It's kind of like an exchange-traded fund. Yeah.
Yeah.
Okay, so Logan, I don't know if this one's going to surprise you or not, but I said I was going to go off the beaten path a little bit, and this is actually another coin that I own. I bought it a very long time ago. I don't include it in my portfolio, but I do hold it, and that is CurveDAO. CurveDAO, if you guys don't know, is an Ethereum token that powers CurveFi, which is pretty much the main platform that the token CRV functions on, right? Curve is an exchange liquidity pool on Ethereum designed for stablecoin. There's a lot of stablecoin trading in liquidity stuff, but I think the DAOs, right? Decentralized autonomous organizations, right? That's what a DAO is. I think that narrative is going to be huge, right? Like a self-governing structure where people like all kind of vote, on stuff. I think that DAOs are going to be massive, right? They're going to be everywhere, and I think DAOs will actually infiltrate everyday life, right? And they haven't yet, but I'm really bullish on Curve DAO, and I actually use it sometimes. So CRV is my sleeper coin that I don't talk about a lot, that has very, very strong fundamentals. Yep. I don't know if that surprised you or not, Logan, but that's the sleeper
You've
coin.
brought it up once or twice.
Yeah, I like Curve DAO. Yeah, so, but I can't, Logan, I can't help myself. I have to do it. What?
Do it.
Do it. Okay, and the last coin that I'm going to say that I have to shill is Nano. Nano is the fastest, greenest, most scalable, efficient cryptocurrency. Well, yeah, because okay. Right, it's Nano pretty much is what Bitcoin wants to be, right? It's like Bitcoin's jealous of Nano, just doesn't want to admit it. So I'm really bullish on Nano. We talked about digital cash solutions. I could talk forever about Nano, right? I love its tokenomics. It has a static supply. All the supply was originally distributed through faucets, right, where everybody could just go, and it's like most of the supply is out into the community, right? And that static supply leaves it very sensitive to changes in demand, right? There's only 133 million coins, most of which are already tied up in wallets, right? So Nano is actually, not only is it it's the only feeless instant cryptocurrency, but it also has all these other great things going for it. And yeah, I mean, Logan, I would say Nano's biggest competition probably is, other digital cash solutions or even stablecoins, right? But yeah, Nano, I think Nano is probably the most undervalued cryptocurrency, that I see at the moment. And I know we could go on forever. Do you have any thoughts on Nano, Logan?
Awesome. Whenever I talk about Nano, I just like bringing up the facts. So comparing it to Bitcoin, the average Bitcoin transaction takes 30 minutes to confirm. Austin.
Yes, one Bitcoin transaction is equivalent to 6 million Nano transactions.
How long does it take for one Nano transaction to occur?
I don't know the exact time. I just refer to it as instant, but obviously nothing's.
I would say it's damn near instant.
Nothing's truly instant. Not even light. You know what I mean? Like even if you turn on the light in your room, right? That light still, it's instant, but it still takes in essence some time. But yes, I would say Nano is relatively instant, right? Nothing is even comparable.
0.2 seconds.
Yeah.
0.2 seconds. So I would describe that
like
as
it's
instant.
Superior to any Venmo or Cash App or any of that stuff.
Definitely.
Yeah.
And Bitcoin transactions on average cost $22. Austin, how much do Nano transactions cost?
Feeless. Free.
Yeah. So Bitcoin also uses as much energy as the whole country of Argentina. And the Nano network can be run on a single wind turbine. That's my favorite fact.
That's just unbelievable.
It's crazy.
All while providing the same aspects of store value and the idea of being an efficient cryptocurrency, right? Not only right, and it's like the supply can't be edited, right? That's another thing, guys. Like the underlying thing, right? Picture cryptocurrency just as our fiat currency, right? The government goes in and edits the supply whenever they want and adds more, right? Like if your cryptocurrency did that, like Logan, if Nano started printing more Nano coins and made the coin worthless, right? Wouldn't that upset you? Right?
It would
That's
definitely
not a good
upset
thing.
me.
That's not a good thing that centralized authority can do that, right? And that's what they're doing to the dollar, decreasing its value. They are able to manipulate and change the currency, which therefore affects the people of the world and the country, right? I mean, there's stuff everywhere, right? I refer to it as a global problem, but yeah, it's pretty good, man. So
awesome. I love that. Obviously.
Logan, so we did all that. We have 15 minutes to spare.
I had one more project that I wanted to go over.
Okay, I'm ready.
I want you to pick. Should I do VeChain or should I do Vite?
Okay, I think I want you to talk about VeChain, but I want you to shill Vite at the end quickly.
Okay. So VeChain is another, actually I own one of these projects and I have a very, very selective portfolio. So the fact that I own it I have my money where my mouth is, essentially, right? So I really, really like VeChain. VeChain is a blockchain platform designed to enhance supply chain management and business processes. So essentially, the platform can be used to track quality, authenticity, storage temperature, transportation medium, and last mile delivery of anything. So a lot of big names are even using this right now. The parent company of Louis Vuitton and Gucci currently is using it. But what they do is VeChain uses smart chips or RFIDs, radio frequency identification tags, and sensors that broadcast key information onto the blockchain that can be accessed in real time by any authorized people. So with VeChain being utilized, you could theoretically order a bottle of wine and see where it came from, the grape that it was plucked from to
That's
your
what I was
door.
about to talk about. Yep.
Yeah, it's truly remarkable. You can see the
it's a big
entire
thing with
supply
me.
chain of everything that your product went through. It's remarkable.
Right, yeah, it's amazing, right? And like I said, it's a big thing with like grocery stores, right? You guys notice, right? If you don't live under a rock, you're well aware by now that America, right? Don't know if you're from America. America is having supply chain issues, and you know, look kind of the world is at this moment, and that's all kind of derived from the whole thing that happened with COVID, right? And kind of throwing the economies out of whack a little bit. But yeah, supply chain issues are a huge problem, right? You don't know, like if you go to the store to get your eggs, milk, lettuce, whatever you want, right? You want to be able to verify that stuff and know where it comes from and know when it's going to be coming, and you know, just tracking that stuff and managing supply chain will in essence make the whole thing much more efficient, and we won't have these blockages, right, that negatively affect supply chain. And right now, I could be wrong, unless something new emerged, but I think VeChain is kind of on its lonesome. I don't think it has any competition right now, currently. I don't think there's any other big supply chain management coins that, especially on VeChain's level, right? VeChain's market cap right now it's ranked 23rd with a $9 billion market cap, right? $8.9 billion market cap. So VeChain is by far the leader in supply chain management, without a doubt.
Absolutely.
And we're pretty bullish on it, man.
Yeah. Its partners also is what really is amazing. You know, like I said, that French multinational holding corporation for those designer brands, BMW Group as well. And obviously, if you're not aware, BMW Group owns a lot of different car manufacturers, not just BMW, and also H&M. So some very big names. And I think that the world is starting to shift in a direction where people like to see where the products that they're buying are coming from. And I think VeChain solves that problem.
When were they? Yeah.
Right.
And what do all these projects that we talked about have in common, Logan?
Lots of utility.
That's it, guys. That's it, right? All these coins serve a purpose, and they want to be here for the long term, and they want to help people, and they want to make the world a better place. In essence, right? They want to provide a product or service, essentially, that allows people to make life easier, right? And those are going to be the coins, the projects that you see. That's where true wealth is made. Yeah, you can catch, a quick pump on whatever the hell, but, over the long run, if you want to be successful in this market, you will not fail if you pay attention to the foundation of the project that you're investing into. So.
Absolutely. Yeah. So we're looking at 10 minutes right now, so I think instead of shilling Vite, we shilled enough projects for right now, I think?
Yes, that's fine. Yeah, we can.
And we can just go to questions.
I want to hear other stuff. Yeah, so out of all that information, I'm sure somebody has some sort of comment or whatever, right? Feel free to talk. You can use your mic. We'd prefer if you talked with your microphone. Typing in live chat VC mute would not be ideal for this current situation. So any questions, definitely voice up. The floor is yours. Definitely want to have a good conversation. But hey, if not, then...
Hey, Austin.
What's up?
And Logan, thank you for your time this evening just to make us understand the cryptocurrency world and everything. I just wanted to know, I'm so sorry, give me 1 second. Just want to mute another server.
Yep, you're good. Take your time.
I wanted to know, you mentioned Nano and the competition of Nano, but you didn't mention you just mentioned it coins, if I'm not wrong. But what type of coins that do you think that might be a competitive to Nano?
Yeah, I said that, right? So like all the other digital cash solutions, stuff like, I'd argue Dash, Digibyte, IOTA.
I mean, Litecoin is their most prevalent competition right now.
Yeah, Litecoin is, well, Bitcoin.
Yeah, obviously Bitcoin.
Bitcoin, yeah, that's competition to Nano. Bitcoin. Any currency that then I even said stablecoins could be arguably a competition. But yeah, those are what's standing in Nano's way. Yep.
Thank you, I appreciate it.
Yeah,
Austin.
of course.
Austin, Logan, I got a question for you.
Let's hear it.
All right. Well, as a portfolio manager, if I were to start managing a larger scale portfolio for cryptocurrency, you spoke about staking, and you spoke about ways to provide yourself relatively consistent annual percent returns utilizing staking, and a couple other things that I'm still trying to understand. What do you think would be the best thing other than the natural progression of the coin itself, the natural appreciation of the underlying coin itself? What do you think the best way to manage something long term would be in regards to staking, having coins in your portfolio that appreciate a certain amount year over year? What do you think the best model would look like for that? Yeah.
That's a good question. Logan, I can talk for days about this. You can talk for days. You can go first. Doesn't matter.
Yeah, I'll keep it short. I think that staking
Okay.
is the answer that you're looking for here, but you have to also remember that you're going to get the appreciation of the coins as well when
And
you're
the
staking.
and the
And the
depreciation,
depreciation.
right?
Absolutely.
Yeah,
Absolutely.
yeah,
Yeah.
yeah.
So, yes, for a
Um,
long term portfolio, staking is absolutely a great way of looking at it because you can lock in those annualized percentage returns.
yeah. It's if you proof of stake, in my opinion, favors the bigger portfolio, right? Because the more you have to delegate to stake into the network, the more consensus you're providing, right? And you will be a big deal in that network depending on how much you put in, and you'll get rewards, right? Based on that. So I think staking should be a part of. I'm staking currently, right? I stake all my ADA, stake it all. I've even experienced staking with audio. But yeah, I think if you're going to be, looking to grow over the long term, staking is a huge part of your portfolio. But then on top of that, you don't want to start staking shitcoins, right? You want to make sure you're staking a coin that has that fundamental foundation that we kept on referring to, right? And unfortunately, not every coin can be staked. It has to be done on a network that is proof of stake. You can't stake Bitcoin. Bitcoin is mined, right? So instead of delegating your coins to the network, you're delegating your money and computational energy, right? Your electric bill is going to be high, right? So yeah.
Something that I also want to bring up, Clayton, and this might actually be very important to you, is there are some wallets, in specific, I'm going to refer to the Nano ledger in this situation, that actually allow you to stake with your coins on that wallet. And the Nano ledger is really good for larger portfolios, as we were discussing earlier. So that should be something you look into.
Okay.
That's right up Clayton's alley for sure.
Huge.
Yeah.
Uh,
Huge.
can I ask another question?
Absolutely.
So you mentioned staking. So would you like, I mean, I don't know what staking means. So would you try to define it in a simple way for what staking is? Because
Yes.
right now, as per your suggestions of transferring everything to wallet, I have transferred all my Nano into the Nitrium,
Yeah,
which you
you can't. You
recommended.
won't be able to stake your Nano. Nano's
No,
not proof
no,
of stake. Oh, sorry.
no, but but something like that. But like if I'm also buying VeChain as well along with Audius, because I read about articles that music industries top singers are also investing into Audius. They have invested more than $10 million already into Audius right now, and that's why I was just thinking of staking Audius and VeChain both. But what does staking actually means? That's my question.
Yeah. Okay. So staking was originally meant to solve the problems of proof of work, right? There's a lot of problems that come along with proof of work, right? Like the climate concerns, the amount of energy consumption, the lack of sustainability in the future outlook of proof of work, right? It's just not. A lot of people disagree with it, right? So then people came up, I believe, somewhere in the nine. No, I'm dumb. I forget exactly when the idea of proof of stake was conceived, but it was very early on, and it was to go against the idea of proof of work. And keep in mind, these consensus mechanisms were even they were conceived before crypto. But in essence, the proof of stake algorithm works by letting users or nodes, right, the people that delegate, validate blocks by locking up a certain amount of coins within the network. Typically, the size of the user's stake is what determines if the node will be selected by the next network validator, right? And they're not only chosen by the amount of coins staked, but also the age of the node, the network randomization. Not all, right? It depends. And this allows for a decentralized network that doesn't take a lot of energy to maintain. So yeah, proof of stake protocols just reward their validators by repaying them in network transaction fees. That would be your passive income.
Okay. So based on what you just recommended, I appreciate you giving me the definition. But is there like a particular wallet that you recommend for VeChain or what is it?
I
Audio.
don't. So Audius, I have my Audius on a MetaMask, right?
Okay.
And then VeChain, I don't know, Logan, where do you hold your VeChain?
Uphold.
Okay. Yeah.
I don't have a
Okay.
huge VeChain portfolio, so it sits on exchange.
Yeah.
Okay, because I have it. I just downloaded a VeChain Tor wallet, so
Okay,
that's
perfect.
particularly
Yeah,
just for
I don't have,
VeChain.
there's just so many wallets, right? I would love to have experience with all of them and know all of them, but it's a lot, you know? So, I would just, yeah, I mean, you could definitely hold your VeChain, right, in like a MetaMask wallet, but, the Thor
Okay.
wallet, I don't have any experience
Trust
with the
Wallet as
website,
well,
but-
definitely.
What'd you say?
You can definitely store it on Trust Wallet as well.
Trust wallet, yeah.
Okay. I appreciate, guys. Thank you.
Yeah. Okay, guys, we got 4 minutes, so I mean, a few more questions if anybody wants them.
Really fast. Solomon, it just so how it works that with the cryptos you're looking at are proof of stake, but I just wanted to emphasize that you can only stake with cryptocurrencies that are using a proof of stake model to process payments.
Well, VeChain's, yeah, I mean, proof of authority. Yeah, there's different consensus. Yeah.
Okay. So which, based on what you just recommended, your suggestion, Logan, which cryptocurrencies are good for staking for a longer term?
You should
I
look.
think
You should really
Cardano,
compare.
Beta.
Yeah, Cardano definitely is, but you can actually look for the rewards specifically online, and it'll show you exactly what you should be looking for.
Right, but when you go to delegate, right, like if you were to go on Daedalus and you wanted to go delegate to a staking pool, all the staking pools that you see, the thousands of them, will have different rewards.
Yeah, so you should look up staking pool rewards for your specific
For your
asset.
specific,
Yeah.
yes, precisely.
Okay. I appreciate it, guys. Thank you.
And if you need any help, let us know. We're happy to
Yeah.
help.
Yeah.
Sure, because I already have started. I had ADA before as well. So I started it buying from $1.57, but like it is on Coinbase. I haven't transferred it into Coinbase wallet or like a proof of stake kind of a wallet. That's why I just
Like
had the question.
all the Cardano wallets are proof of stake. Right?
Okay.
It's because that network, Cardano, functions on a POS consensus mechanism, right? So every like your Roy, Nami, Daedalus, and all the other ones, they're all going to offer you the opportunity to stake. At least, well, I'm assuming that right. I don't have experience with Nami, but I know on Roy and Daedalus they do. But yeah, they should.
Okay. Thank you.
Okay. What's up? Sorry about
I
that.
have like kind of like a last minute question, I guess. You
You got
said
two.
Bitcoin,
Yeah, you got 2 minutes. You're good.
yeah, you said Bitcoin cannot be staked. I did find like, I was looking into staking and I found a couple
Yeah.
wallets in the past week that have said, yeah, we do Bitcoin staking. So are those scams
No.
or?
So I'll explain it to you, right? So you have to understand. When we talk about Cardano, it's proof of stake. That's the layer 1, right? That is the original protocol put out there. That's how it's supposed to function, right? Bitcoin, you cannot stake on its layer 1. You're gonna need something built on top of it that offers that, right? It wouldn't even be like real staking because if you're staking Bitcoin, you're not giving consensus to anything. It's a derivative stake. You understand? It's not real. That's not the layer. If you go read the Bitcoin white paper, which I encourage, Logan, we didn't talk about that. Damn it! I encourage you guys
still can.
to go read the Bitcoin white paper so you understand what it is. There is no staking in Bitcoin at all, right? On the original layer 1 protocol.
So places like crypto.com and these other organizations like Gemini, all of that, they are the ones creating, I'm sorry
Right.
if I'm using the wrong jargon, but like the layer 2 to allow
Yeah.
for Bitcoin to be
Well,
staked.
they're the ones allowing. It's like. Well, they're the ones just telling you, oh, stake here. It's pretty much saying like, here's passive income. You're not securing any network, right? It's the Bitcoin protocol doesn't work off staking. It's proof of work. You know what I mean? So it's pretty much just them saying, hey, come to our exchange and we'll give you passive income. That's what it is. Hold your coins on our exchange and we'll give you passive income.
All right, thank you, Austin.
Yeah, of course.
Logan, Austin, this was a great presentation. I
I hope
loved
you
it.
got value
Awesome.
out of it. I
I'm
hope
so
everybody
glad.
here got
Yeah,
got
for
some
sure,
value
for
out of
sure.
it.
Thank you.
Yep. All right, Logan, do you want to conclude today's this bi-weekly?
Yeah, I mean, is there any last minute question? I feel like we did that pretty fast.
We're actually, Logan, 25 seconds left on the hour timer. How crazy is
Fast,
that?
hurry.
Right on the
Somebody ask a
button.
question. I'm kidding.
Kidding. All right. All right, Logan, I think you can end the recording. Conclude that. Thank you for everybody.
Cool. Thanks
that's
again,
watching.
everybody.
Yeah.